Hello and a very warm welcome to Startup Central. I'm Vikram Oza. You're joining us on a show here on ET Now that focuses on startups, on technology, on innovation, disruption, in fact, anything that has to do with the new economy. You'll find it right here on this show. If you have a unique idea and you'd like to share it with us, any kind of feedback is also very welcome. You can pitch to us at suc@etnow.tv. That's our email ID. All right, let's first up talk about what the markets have been doing. You just can't get it out of your mind. What a dramatic swing we've seen in the equity markets today, haven't we?
First rates, for the moment, if we stay here, I think the bulls should be celebrating and they should be doing cartwheels. 5% lower for the Nifty, or I would say only 5% lower for the Nifty on a day when Dow was down 10%. Are we likely to start with a gap down and then will bulls come back, or the selling is only going to accelerate? Very difficult to say.
But it's accelerating now, Nikhil.
We are 10 points away from the circuit, so you want to stay there right now because 10 points away, we are underperforming.
It's done, it's done.
There you go. Give it a circuit. It's for the first time in last 10 years, I think, about 8 years, we've had a circuit down on benchmark indices.
If you're sitting on a cash stock, okay, you'll take a card, but you can ride it and see next year things will come back to order, etc. We have seen similar crises in the past, so to that extent you can ride it. It's a futures position which always creates a problem, which always creates mayhem.
China reacted very quickly to their problems and they have overcome the problem by and large. The world was laughing at China or ridiculing China, but they were not wiser to the impact that they were having despite the scientists telling them.
8,555, and you can see the sort of move that you're seeing right now, 8,555, and right now the market is 9,592, which means a full 1,000-point recovery is what we have seen. I mean, it's an unprecedented move even on the upside. Markets were continuously going down with really no major move, and now you're seeing this sort of recovery.
Special day for the markets, not only because of the down circuit or the swiftness of the fall in the market, and also equally fast rebound.
And wrapping up the markets with a triple-digit number on the index. Yes, indeed. Breathing a sigh of relief, I'm sure, across the board for investors who have lost out very massively.
What a day it's been in the markets. Friday the 13th actually playing out in its glory, and look at how we've gone to hell and back. The most intense kind of swing that we've known ever. And of course, we've ended over 1,300 points higher, but we hit lower circuit today, all in a day's trade on the large trade. So if you're still reeling from the way this Friday the 13th has panned out, here's a special highlight from today's trading action. Let's talk to a startup that prides itself on being a discount pricing mechanism that has got so many people on board. It's created for itself this online trade platform. How have they been dealing with the wild ways of the markets today? Zerodha's Nikhil Kamath is back with us on Startup Central. Nitin, I wish it was Nikhil, I should say. These times are volatile to say the least, but what a day it's turned out. What was it like today for you? How were users reacting to market conditions, having hit lower circuit and the major pullback that we saw?
Hi. So in the morning when the circuit actually happened, it happened on really low volumes, so not much activity happened before the markets shut down at 10%. So it didn't really affect many people. Our systems worked very well through the volatility. We didn't have any downtime or anything like that. So all in all, it was not such a bad day. It was, the recovery helped a lot of people in the market and brought a little more stability in the market. But in terms of how drastic the day could have turned out, I think net-net it turned out quite well.
That's a little reassuring to hear on a day like this. But Nikhil, what's your overall take on the way the markets are behaving? How does it affect your own business strategy, considering it could spook potential users of Zerodha, despite this low-cost model that you have? But going ahead, if you're going to grow your business, these times certainly don't bode very well, do they?
No, they don't. But I think what is happening in the world today is bigger than, just how your business might do in the next 1 month or 2 months. I think the markets are reacting more based on the global pandemic versus what might be happening internally in our country or governance or politics of our country. I think there will be a certain amount of volatility that we can expect even going forward, because nobody truly understands what the issue is and the magnitude of the issue, how big this can actually get. So what we advise our users and investors in the market overall is to, stay cautious right now, do not leverage. This volatility is bound to bring a lot of right opportunities and a lot of great opportunities to make money. And the people who are sitting on cash at that point and have liquidity will do significantly well in the market.
Taking up your advice, because I mean, these are tough times. Investors, traders, they are reacting to these conditions and very differently, I would imagine. So what are you seeing right now? Is there heavy deleveraging of positions as well? What's the general sense you're getting in terms of reactions among your users?
Surprisingly, clients have done quite okay in the last week and a half's volatility. I think most brokers, not just us, but even others, have been really prudent. They haven't allowed people to take too much leverage or take too much margin into a position. So people are not highly leveraged, and the point of margin call has not even come close. So people are fairly they have a fair amount of liquidity in their accounts. We see very reasonable utilization levels. And I think a lot of people are coming in now and starting to peck at stocks because they believe valuations to be fair now. But we would continue to advise that ahead of what might come out over the next week or month, and however this news around the virus is factored in by the markets, I think the best thing to do is stay cautious and do not use leverage at this point of time.
Nikhil, you've been a zero debt business so far. We also know that though the markets, there is the high risk one has to be able to deal with as and when you have these conditions in the markets. High risk can also yield high returns. So would you alter your strategy to grow the business? Because at the end of the day, you have to be able to do that, and certain opportunities just present themselves, don't they?
Totally. I mean, as a large majority of the businesses might not be doing well right now, I mean, the listed companies out there on the market that people can buy into, there are certain companies which do take advantage of all that is going on right now. So I think when people actually seek out great quality stocks which can benefit from all that is happening in the world, there are many opportunities still out there for people to find.
In terms of your own business, Nikhil, it's important for brokers to remain well capitalized in riskier times. But how are you taking on your risk mitigation mandate on behalf of your users? I know you've been suggesting to your users to go easy on their leverage, but by way of the risk that you would take on as a broker as well, how are you aligning your business strategy in line with our volatile conditions in the markets?
So Zerodha is extremely well capitalized. There is absolutely zero debt on our books, and it's a very lean business model, a company which has been run really well for many years. And as a broker, I think our focus right now is on how to help our clients do better over the near term versus trying to figure out our own trajectory and stuff like that. But on the Zerodha front, I think the best thing that we do is we don't allow people too much leverage. I think we allow the right amount of leverage, which helps people sustain and do well over longer periods of time. Because markets always have ups and downs, and I think too much leverage is one of those things which does not allow you to account for even say a 20 or a 30% move in the market because you're levered at least that many times. So my biggest advice in all of this would be, do not lever up, especially in times as certain as today or over the last week. And I'm sure over the next week or the next month, there will be many more different news points which come out from different pockets, which will cause more volatility going ahead.
I was asking, with all this uncertainty around us, Nikhil, about the future, about how this entire period is likely to pan out, because the nearest case that we can compare it to is the crisis of 2008. But these wild fluctuations that we're seeing in the markets, they are going to affect your business in one way or the other. So when it comes to profitability, considering you're a volume-driven enterprise, how is that likely to get impacted?
Well, for an enterprise like us, we might have, say, a 10% or a 20% drop in top line revenues over the short term based on how volatile the markets have been. But I think it'll be good for us and good for the larger cause, because lesser number of people would be trading in the market. But by virtue of having lesser volume or lesser number of transactions over 2 or 3 months, I don't think it even makes a difference to the long-term trajectory of the company. We're looking to have clients on board who stick with us for the next 20, 30 years over their lifetime, who make and create long-term value for themselves by being investors in the stock market. So the temporary volatility which we are seeing over 1 month or 3 months or 6 months, I don't think affects the long-term trajectory too much.
That's the hope, but you've got a business that's running for the last decade or so. I'm just wondering, when you set out building this business at the outset, how much did you factor in events like this? The only event, like I said, in recent times would have to be the 2008 crisis, and you came into being as a company, as Zerodha, like we know it, just after that crisis played itself out. So how much do you build that into your business plan? Did you actually do that?
We always account for black swans. I mean, it does not have to happen while we have existed over the last decade. We don't just model for events which have happened, but we model for events that might happen in the future. We might have had a 20% down day today. We might have a 20% up day or a down day in either direction at any point in the future. And I think as a business, it is important for you to factor in these black swan events and test your systems and figure out how they might react during each of these cases. And I think that really helps you prepare for the future better, because nobody can predict tomorrow, and the day that we have a 20% down day, we have to be prepared. And as a broker, we have always worked on bringing our systems up to par, so we are able to deal with a situation like that much better than any of our peers could.
Reactions easy to predict, considering that we do get very jittery at times, but considering these times, we have very few assets where investors have faith. Perhaps that's why we're not seeing retraction by way of the kind of exposure that people have to equities right now, and perhaps that is what holds the business steady. But you can't always bank on that, can you?
No, you can't always bank on that maybe, but I think especially when it comes to India as a geography, I think the pain here is not as big as many of our countries, say in Europe or America, for instance, because the amount of exposure each of the people in those geographies have towards the stock market is significantly larger than in India. So in India, even when these fluctuations happen, I think it's not too much chaos, because a very small proportion of our country has any exposure to stock markets as such.
While I know for a fact that you applied for your mutual fund license, in fact, I had a chance to speak to Zerodha about that as well when it came into the news, but perhaps you may not want to wait for as long as a year, though of course that license is going to take as long as it does to come into being. But would you consider and work towards setting up that business faster? Because a lot more users would want to opt for the SIP route rather than direct stock exposure in light of all the uncertainties around us.
Yeah, I think it's a great time to be a new asset management company, especially to encourage the investor base to approach stock markets in a more systematic manner, wherein they don't so much try to time when the markets will go up or down, but want to enter the markets to get long-term returns of say 12, 13, 15% a year, and in a systematic manner wherein they can allocate a certain amount of capital into the stock markets every month. So, I mean, we have to wait until our license comes through, but for any other asset management company out there who is starting off now, I think it's as great a time as any to be starting off in this domain right now.
The focus over there was to be millennials, people who haven't been investing very regularly, and for that you wanted to create products that are differentiated, nothing that's already out there, something that is easier to understand, that is tech driven, because that's what you specialize in. In these troubled times, how do you get millennials on board? What's the thought process? Have you devised a strategy to convince them to park their money more actively in the equity markets?
Well, we have a lot planned around the AMC, but I think it wouldn't be right to talk about it already because we are a certain amount of time away before we actually get the license. But in due course, we'd love to come out and talk about all that we are planning and all the new innovative things we can do around our asset management company.
But Nikhil, overall, how nimble do you really need to be to ensure that your business adapts to market conditions? It's a need of the hour, right? Because the brokerage business has been done in a traditional way. You've come in with a low-cost model that's tech-driven, and that perhaps is a differentiator at the moment. But to stay ahead of the curve and adapting to certain market conditions, getting the faith of your users, your clients, becomes very vital. How do you plan to do that?
Well, you have to stay nimble and lean. I think the thing about staying lean is you are the one who can survive the most when things are going badly and when things are going well. So the only way to stay very, very nimble is stay agile, change ahead of how quickly your peers can change, be willing to adopt new technology which is out there, and constantly look at all you're doing to figure out if there are any other new efficiencies you can bring into your model.
How did you get over the technical glitches? Because a couple of them last year had you on the back foot. Certain lessons would have been learnt from that because it's very vital in times like this as well, because once faith is shaken, it's very difficult to bring it back. And the technology-driven platform that you're on, that needs constant care, doesn't it?
Totally. I think even during last year, if you were to compare the few glitches we had or the couple of minutes of downtime we had versus our peers in the broking industry, we still, I think, were amongst the top there and we had the least amount of downtime. But we have taken a lot of effort into figuring out what we could have done and changed our systems, upgraded, brought in redundancies and backups. And it seems to be paying off because through all the volatility we have witnessed over the last 2 weeks, we've not had a single issue and our systems have worked really well. So I think the work which went into it last year is really paying off right now.
Yes, and which I'm sure you're very glad about, considering that these times you really require a setup that is robust. You've also had a big hit in recent times, Nikhil, because of the Yes Bank crisis and the moratorium that was put in place. You had to pause your e-mandate transactions and you had to ask your users to shift to a manual transfer of funds. I mean, when it rains, it really pours, doesn't it? So that kind of disruption, how have you been able to deal with it?
I'm sorry, can you say that again, please?
The e-mandate, now because of the Yes Bank crisis, that was derailed and you had to ask your clients to go the manual route. How much disruption that create in your system?
Well, I think we've done the best with the cards we've been dealt and we've figured out how to be as compliant as we can be and make the changes that we can ahead of our competitors again. And I think only time will tell how that will do and in the future how much of a difference it will make.
I understand you've asked all your 1,200 employees to start working from home in light of the coronavirus outbreak. How is that panning out? I know technology makes it possible, but still there must be a lot of push and pull to get the work culture right when people are working from home. How are you working around it?
I think it's going fairly well. I mean, we put in the systems in place for them to be able to function as well as they can from home, like they could while they were here in the office. And I think outside of the culture issue in the interim, it is important for each one of us to take the onus and make sure the spread of this virus is contained. And I think that takes priority over culture over the immediate short term. So right now we are more focused on, having everybody safe and being able to work from home and still, remain productive and make sure everything works well, versus worrying too much about culture in the very short term.
Wish you great luck going ahead, Nikhil Kamath. Such a pleasure having you on Startup Central. Thanks very much for joining us today. And of course, we'll take a very quick breather now on this edition. Coming up, we will talk about the funding picture in these troubled times. How is that likely to pan out in the startup universe? That and other stories right here on Startup Central.